Hello everyone and welcome back to Aurora Crypto Land. In this video, we're going to examine the single candle pattern of the hammer. If this pattern appears in the ceiling, it's known as the hanging man pattern, which was explained in last video of this series. And if it appears on the floor, it's known as the hammer. The hammer is a bullish reversal candlestick pattern that's formed when the price of a security opens in the low, falls to a lower low, and then rallies back up to close near the open. This pattern can be red, which means it's a bearish, or it can be also green and bullish. In green color, and when there's an ascending candlestick, it will increase the probability of the reversal of the trend. The hammer has a long lower back and a small body, which the shadow is usually 2 to 3 times its body. And the longer this shadow is, the more valid the pattern will be. Long shadow indicates that there was a lot of selling pressure at first, but that the buyers were able to overcome that pressure and close the candle near the open. The hammer is a relatively rare pattern, but it is often seen at the end of a downtrend, and when it appears, it's a sign that the bears may be losing control of the market and that the bulls may be about to take over. Before moving to real chart examples, here are some additional things to keep in mind when trading the hammer. The hammer is more reliable when it is found on higher time frames such as daily or weekly charts. The hammer is more likely to be successful if it's preceded by a strong downtrend. And the hammer is more likely to be successful if it's accompanied by other bullish indicators such as rising volume or a bullish engulfing pattern. Let's see some example charts to better understand the pattern. We observe this chart together, which you can see that a hammer pattern with a very long shadow has formed here, and a very strong confirmation candle has formed here, which has followed an uptrend. Also, at the end of this downtrend, a hammer pattern has formed, which is shown here with a shadow almost twice the size of the body. The confirmation candle is a bullish candle that's closed above the body of the hammer candlestick, and a very good bullish trend has formed. In the next chart, it can be seen that a hammer pattern has appeared here again, and the confirmation candle is an ascending candle. And the person who enters the trade here opens his position in the third candle and experiences an uptrend here. Also, a hammer candle can be seen here, and the second and third candles are bullish candles and form an uptrend. In the next chart, we'll see that the candle here, a hammer candle, again, a hammer candle, and a confirmation candle, and a very strong upward movement has formed here. Also, here we see that a hammer candlestick and a bullish confirmation candle and a good uptrend have been formed. And here a hammer pattern and the confirmation candle and a good uptrend. In the next chart, we'll see together a hammer candle and the confirmation candle are fully formed, and there's an excellent uptrend ahead. Remember that the hammer is a powerful reversal pattern, but it's important that it's not a guarantee of a trend reversal. And it's always a good idea to use other technical indicators to confirm the reversal before you place a trade.